Hey guys, Dave Keller here with Market Misbehavior. Finishing up my first week of hosting my new Closing Bell show on Stock Charts TV. It's called The Final Bar, runs every day at 4 p.m. And I've had guests on most of the days this week. And so I've had a chance to, very quickly just pick the brains of some really capable market strategists and analysts and things like that. And what has struck me so far about these conversations is that I've given them just 3 to 5 minutes, give me no more than three charts, give me your take on the markets. Most of them are coming at me with really long-term charts. In fact, my guest today, Mark Newton, actually had monthly charts going back 20, 30 years. And it's so funny that given the opportunity to talk about any time frame, any sort of approach, their answer, these professional analysts, people that know, are looking really longer term and trying to put the short-term movements of the market into proper perspective. I've always talked about a friend of mine years ago had shared the idea of the flickering ticks, and that the market, if we get too caught up in the flickering ticks of the market, we get just caught up in the movement, the red and the green, and all of that, and forget to remember the long-term picture. When I've coached financial advisors about thinking about their investment process, I've often looked at their routines and asked them, what's the very first thing you look at? What's the order, the process that you follow to sort of understand your positions, understand the market environment? And a lot of times I find a disconnect between the investment horizon they're trying to approach, right? How they're trying to win the game, what time frame they're looking at, and what their routine is geared for. And a common thing is you have a long-term outlook. You're trying to make a long-term play, but you're very caught up in the short-term movements. There's a lot of challenge when you pay too much attention to financial media, especially if you don't do it in a disciplined way, because by definition, you're always looking for a new headline, always looking for a new story. So you naturally have a short-term sort of orientation, because that's why there's tons of stories. Every little movement could be a potential little story, potential theme. But as an investor, especially a long-term investor, you're hurting yourself by focusing too short-term and not having a proper long-term perspective. This is true in life as well. I find, a lot of times I get so caught up in crossing tasks off, following my daily to-dos, that after, a week goes by and I'm just like, all I did was check off these little things. What about the big picture? Like, am I really even going in the direction that I want to? So for me, having a weekly strategy session every Sunday afternoon, sitting down, hopefully with my wife, going through our calendars, thinking about, where do we want to be individually? Where do we want to be as a family? Where do I want to be professionally? And am I planning out my weeks and then my days within those weeks to really help me pursue and accomplish some of those goals? So my question to you today is, what are you doing to prevent a short-term orientation and really plug into more of a long-term orientation as an investor, as a human being? If this sort of thinking about investment processes, routines, decision-making is of interest to you, I hope you'll hit subscribe. Also, check out the other videos on the Market Misbehavior channel. Thanks so much.